All right. Good morning, everyone. Darren Marcus here with the Darren Marcus podcast. I've got a great guest today, Mike Ballard. Just to give you a little background on Mike, Mike is the co-founder and managing partner of Camino Verde Group, a Las Vegas-based real estate and investment and development firm that focuses on multifamily and mixed-use real estate. Mike has over 30 years of industry experience and has specifically led the firm's initiatives of bringing affordable housing to Las Vegas. He is currently involved in the development of $200 million in multifamily real estate in California, Nevada, Utah, Carolina, and more. And Mike, welcome. How are you doing this morning?
Thanks. Thank you very much.
You were telling us, we got a chance to talk a little bit. I normally get to do that. We got a chance to talk a little bit before starting here this morning. And so really great information you were giving us and some cool background. The first thing I always like to do is give us a little bit of background. Tell us about you, where you grew up. I know you're a native, right? Mm-hmm. So give us a little background.
Yeah. My mom's from Montreal. She met my dad at an Air Force base right on the border of Canada there in Plattsburgh, New York. And they got married and drove out here and never left. And he retired. I was born at Nellis. And, they had some challenges. My dad was an alcoholic. My mom was a compulsive gambler. And I moved a lot. We had to move. I moved 10 times before I graduated high school.
Wow.
I went to 5 elementary schools and
is that all within the
all
valley?
Here wow. All here in Vegas.
Okay.
All here in Vegas. But, I joke that oftentimes our challenges become our superpowers.
Yeah.
Help identify our superpowers. And I remember in the 4th grade, I went to 2 different schools, lived in 2 different neighborhoods, and I had to meet people to break into, just imagine 9-year-old kids.
Yeah.
Some can be mean, some can be nice.
Yeah.
I just had to develop new networks, and from 4th grade, I've been networking. And so when
what high school did you graduate from?
I went to Chaparral High School.
Chaparral. Okay.
And mostly I lived in North Las Vegas for my youth. And then at the end, my dad sobered up.
Okay.
And things were better. And we moved over by Chaparral, which was the new kind of suburban high school.
Yeah, that was
Vegas.
the hot spot, right?
And it was one of the hot schools. And so that went well. And so I went up to Brigham Young University.
Okay.
Graduated there in business, did an LDS mission to Milan, Italy. Which is a tough assignment, but an awesome assignment.
Yeah.
And, learned a lot of good skills, and it helped break a lot of bad habits.
So you're bilingual, obviously, as well,
I'm
right?
bilingual.
Yeah.
I can kind of fake about 4 languages. My mom had to learn English. She became a naturalized citizen when I was 12.
Okay.
And so speak some French, Italian, Spanish, because you live here, you have to speak a little Spanish.
Yeah.
And I don't do any very well other than English, which I think I do fairly well.
Yeah. Awesome. So what did you go to BYU for?
I jumped around a bunch of majors, but graduated business with an emphasis in marketing, and then came right back to Vegas to work for Xerox Corporation, doing sales and business development. And then I got hired by 2 different national accounting firms, Laventhal and Horwath, and then McGladrey and Pullen. And Laventhal was number 9 out of the big 8. It was a national firm.
Wow.
And it was the 2nd biggest firm in Vegas.
Wow. And were you doing accounting?
I was not. I was doing business development, primarily for their tech group. And then we grew fairly successful there. And then I started marketing the firm. And that's where I started getting involved in different associations. And the firm was the largest accounting firm to the real estate industry in Vegas.
Really?
We had a whole appraisal group with several MIA appraisers. We did a lot of the feasibility studies for the early casinos here.
Okay.
Back in the 80s when I was there. And so I got involved with NAIOP. There was not a chapter here. And one of the partners in the firm, he and I helped start the NAIOP chapter here.
Oh, wow.
And then I was more the minor player in that one. But then...
So real quick, for anybody who doesn't know what NAIOP is, can you...
Yeah, NAIOP is the National Association of Industrial and Office Properties.
Okay.
And it's a trade group where brokers and owners and developers and different folks meet, and they share industry knowledge and best practices, and they lobby together to advance political causes that are good for the real estate industry, primarily the commercial industry.
Gotcha. Okay.
And then I was asked to help form the Lead Institute for Real Estate Studies, and I was on their founding board. And that was a great experience. Got to meet a lot of wonderful people. And then about that time, I started my own consulting firm. And it was primarily a PR firm.
Okay.
And public affairs. We did a lot of land use work for...
What was the name of your PR firm?
Ballard Communications.
Ballard Communications, okay.
And it quickly grew to be the biggest PR firm in Nevada. And we didn't do any gaming work, which was kind of interesting. And that landed me in Investors Business Daily, a national magazine, and a couple other trade publications. Because because my mom was a compulsive gambler, I didn't want to be involved in gambling.
Yeah. And that's impressive too, considering that at that time, I mean, really, gaming was the only industry in Nevada.
Real estate and
in
construction
Vegas.
has always been there too, right?
Yeah.
And so that's the part of the business that I was in. And so we got involved working with the Thomas and Mack families, the Greenspuns, the Ken Templeton, Molaskis, and just ended up becoming the 16th biggest PR firm in America to the real estate industry.
Wow.
We worked for Forest City Properties and for Union Pacific Realty. We helped launch Sun River St. George and some projects in Salt Lake City, and as well as working here. And but we had a lot of fun, and I learned a lot about the real estate industry, and I started my initial investments into real estate from that company and growing it and seeing what my clients were doing.
Yeah. So you've seen the Valley change quite a bit.
Oh yeah.
Yeah.
Oh yeah. I remember, back in the day when there was no Mandalay, no Mirage, and the big nice restaurant, one of the big nice hotel casinos was the Golden Nugget.
Yep.
And the Desert Inn. And so it's fun to watch and to work, to be able to talk to Perry Thomas, and have him talk about his deals. Or I remember bringing Bob Mayhew, who used to work for Howard Hughes, to speak to our Rotary Club.
Wow.
And, he'd tell stories, and the stories those guys would tell. And Dick Bryan, former senator and governor, and Harry Reid, I developed a good relationship with both of them. And those were good men, good things, doing good things for our community, and just being involved with a lot of these pioneer families.
Yeah.
I remember sitting in Erwin Molaski's office, and he was my largest client for most of the time that I had the PR firm. And he was just a sweet man to me. But I'd be in there once, and he got a call from Larry Hagman. Oh, wow. And I'm like, the star from Dallas, Larry Hagman, that Larry Hagman. Yeah. Says, and I learned, soon into my relationship with Erwin that, he was one of the founders of Lorimar Telepictures.
Oh, wow. I didn't know that.
And Lorimar was named after Lori, his wife, and then Molaski, Adelson, and Rich.
Wow.
And,
okay.
So that's how they got the name. And so, that was kind of cool. And Erwin also built country club communities.
Okay.
Right. So he built, I think, 6 here in Las Vegas and La Costa in North San Diego. Okay. And one time I'm in his office, this was, again, a long time ago, he got a call from Arnold Palmer. And I'm like, yes, I'll hold while you talk to Arnold Palmer, and that type of thing. And I remember a fun story was he was pretty mad that the city was giving money to a developer to build a building right next door. He was the owner at the time of what is now the Bank of America Plaza, but was the Valley Bank Plaza.
Mm-hmm. And is that the one right there at 95 and Rainbow?
No, that's the one at 300 South 4th Street.
Oh, okay. Oh, downtown.
Right,
okay.
Right downtown,
yeah.
right?
Yep.
And the city was giving money to the developer from Colorado who was going to build an office building right next door, and they were paying for the parking garage. And Erwin says, I'm mad. We need to do some sort of hit piece on this new mayor, Oscar Goodman, who's giving money to using my property taxes to fund this guy's parking garage to compete against me. Yeah. He says, I got 2 vacant floors. Yeah. And this isn't right. And And I said, calm down, Erwin, we can fix this, and let's set up a meeting with the mayor.
Mm-hmm.
I'm sure if he heard your story, he'd much prefer to give that money to local people than to Colorado developers.
Yeah.
And so we ended up sitting down with Oscar Goodman at the Las Vegas Country Club. And we had kind of warned the mayor's staff what Erwin was thinking about, and to just let Erwin vent a little bit. And Erwin basically vented, explained his issue, and Oscar raised his voice a little bit, and he said, "You're damn right. And let's do something about that." And he said, the IRS is going to move its offices from Oakey and Decatur, and they're trying to be downtown to help us redevelop our downtown. Why don't I have you be the developer of that property?
Wow.
I'll let you look at a couple properties we're thinking about and see what you can do.
Yeah.
And one thing led to another, and the IRS moves downtown, and that particular building was built on land that was free.
Wow.
Free. And Erwin got to be the developer. And then, years later, they built the tower right next to the IRS building, the Water District, the Mulaski Corporate Center, I think it's called.
Okay. Yeah.
And that was done because of a conversation that Erwin and I had when he was mad in his office looking at a developer's project being built across the street.
Wow. Some great Las Vegas history,
man. That's a fun story.
Yeah. Let's talk a little bit more about your PR firm. So what year did you start your PR firm? Was it 93, if I recall correctly?
92, I think.
92? Okay. And did you start on your own? Or?
Yeah, I didn't know what I was doing.
Yeah.
Most entrepreneurs, you don't know what you don't know, and you think you can tackle the world. And I was probably 30 years old and 31 maybe. And I was at the accounting firm and I was doing really well, but they wanted to change kind of my role. And so I said, I'll make it easy on you. I quit and I want you to be my first client.
Oh, wow.
And
I like that approach.
I started working primarily with accounting firms and law firms.
Okay.
And over time started doing work for Prestige Travel.
Okay.
And the Falcon Summer family, which are divine people. And then I started picking up developers, and I started my own kind of little quasi trade group called the Development Roundtable.
So real quick, because I'm going to go somewhere with this. So the accounting firms that you worked for, they dealt primarily in the real estate space.
They did.
So you had a great understanding in real estate.
Yeah.
You also had a great understanding of accounting.
Mm-hmm.
So when you leave, you start your own company. Your first customers are accounting firms.
Accounting firms and law firms.
Okay. And which in real estate and accounting, I'm sure you're dealing with a lot of attorneys as well. So
Yep. And they were trying to market to, I would help them in marketing to the real estate industry or the construction industry or the banking industry or whatever.
Mm-hmm.
But a lot of those all overlapped because of banks want real estate financing and that type of thing. And, over time, then I also helped start 2 banks, one of which was Ed Jameson, basically, when he was starting his banks. I think it was Nevada Community Bank.
Okay.
And then I helped start Business Bank of Nevada.
Okay.
And then I ended up being on the board of Black Mountain Community Bank in Henderson. And,
okay.
And that was a fun experience, learning about the banking side. So I've been involved in lots of startup things.
Yeah.
And so, as we built our PR firm up, we ended up having a real estate practice, a professional services practice, a financial services practice. We ended up having a healthcare practice in Mountain View Hospital and desert radiologists and
when you say
cardiovascular
practice, you guys were actually providing the services?
We
so you
were
had
doing
real estate
PR.
services?
Yeah, we had a PR firm, and our employees, we had a team that focused on real estate clients,
okay.
a team that worked on medical clients, and our medical
very industry
client was
specific,
pretty
each
cool.
one. Yeah.
And we ended up being able to recruit top-notch people that had some experience that were moving here for other reasons.
Mm-hmm.
A spouse got moved here, that type of thing. And so, like our medical group, we ended up we picked up Pfizer as a client.
Wow.
To represent them in 3 states in in Nevada, Arizona, and New Mexico.
So how many employees did you have at this time? Do you recall?
Probably 15, 16.
And that was over a how many year period?
it took us about 5 years to get there.
Wow. That's pretty rapid growth.
Yeah. And we had a tech practice, and we did a lot of cool things there, and that ended up helping to change my career a little bit. And so I always liked doing tech stuff. At the accounting firms we were installing accounting systems for developers and contractors and property managers, job cost systems,
and it was
that
all
type of thing.
tech-based, right?
Yeah, and we worked, with a lot of big contractors and developers related to that. So, all these different industries kind of kept morphing and crossing into each other. And so I had the firm for about 9 years, and one of my clients was a pretty interesting client. He put me on his advisory board, and then he basically made me chairman of the board of a company. The company was called SRD, and SRD worked for the casinos, and they caught bad guys using facial recognition and data analysis, that type of thing. And we'd capture all the different data sets of the casinos, the employees, the vendors, the customers. And then
what are data sets?
Data sets is just big amounts of data, right? All the customer lists, all the vendor lists, all the employee lists, and then would get from various law enforcement organizations their bad guy lists. And would compare them. And find relationships. We created a product called NORA, which stood for Non-Obvious Relationship Awareness, and started marketing that. And it was the coolest thing. And all of a sudden,
so you did this all while you had your PR firm?
At the PR firm. But then, and I ended up leading that. I ended up loving doing the tech work.
Yeah.
And we tried, we couldn't compete with Silicon Valley tech firms to do traditional things. But I said, where we could develop a name is in real estate technology systems and gaming technology systems.
Yeah.
So we picked up a client in York, Pennsylvania. It was a specialist in meeting room visualization and assignment and pricing, and it was the coolest thing. And so we'd all these things would kind of intersect, and so we started doing work with SRD, and he gets $1 million in financing from the CIA's venture capital firm. That company, I had never heard of it before, and it was called InQtel. And so Jeff Jonas, who's just an inspiration, he's enthusiastic, he's just an amazing individual. He and I really connected on a good level, and he was technically amazing, but he started giving me more and more of the back office questions to problems to solve and that type of thing. And then after he received his first tranche of money from the venture capital firm, he made me an offer I couldn't refuse.
To purchase
I
your
felt
PR
like
firm.
an NFL athlete. He gave me a signing bonus and
Really?
a salary.
And this was to purchase your PR firm, or to come work for him?
To sell my PR firm and to work for him. And
wow.
I was a board member and chief operating officer of this software company. And started to meet with major executives of industry, both AIG, and we were going regularly. We were working on deals with AIG, the big insurance company in New York City. We were working with the federal government, the CIA, and other groups.
Wow.
And as well as the local hospitality community here. And it was a fun assignment, but I had to sell my PR firm really fast. And I found a gentleman who I basically ran an ad saying, I'm looking for a vice president of operations. The guy who was my right-hand guy, he was over 65. He didn't really want the role. He was doing an amazing job running our healthcare practice. He was a big public affairs guy in Hawaii running the biggest healthcare organization there, and he retired here. And he didn't want it. So I ran an ad looking for a VP of operations, and we got a bunch of people that were looking to be the number 2 of the firm. And I didn't let him know that I was leaving until we got near the end. And we found a guy who basically said, I don't know that this would work out for me because I'm used to running things. And, I like to be the boss and this type of thing and that type of thing. And I looked at my partner and I said, this might be the guy, and we looked at what he had to, what he offered. And we ended up making an offer, and he bought in at 20% of the company. And so I sold, and then I offered him the first right of refusal to buy the other 80% of the PR firm.
Okay.
And then I sold it a month before 9/11.
Wow.
So then the Vegas was hurt a little bit, pretty hard.
Yeah.
Well, not a little bit. Vegas was hurt pretty hard.
Yeah.
And all of a sudden, and his style was very different than my style. And one by one, clients either said, I can't keep going. My business has slowed down a lot. I need to cut down what we're doing here. Or I'd get a call saying, his style is so different than yours, and he's kind of changing what we're doing. And I think we're going to move on to somebody else. And I'm sorry, Mike, but this is the way it is. And so the firm shrunk to about a fourth of its size.
Wow.
In a year.
Wow.
And at the end of a year, that gentleman said,
see you later.
I got to go.
Yeah.
And one of the other parts of the deal was he had to put the lease in his name and we had a line of credit.
Okay.
Which I was barely using.
Yeah.
And he had to get that line of credit in his name, and he wasn't able to do that.
Yeah.
Or maybe he wasn't able to do that. And so a year later, the line of credit was maxed out. The firm was a fourth of the size that it was, couldn't pay the rent.
Wow.
And I started sharing that information with my partners at the software company.
And this is where you guys were ranked 19th at one point, right?
And then as far as in the real estate industry.
Yeah.
We were we were like the 110th largest PR firm in America.
Wow.
Right. And it just shrunk. And so I basically started telling my partners, hey, I got to go fix some stuff here. I got to go deal with some issues and try and, reinstall people and that type of thing. And at the same time, SRD was going through this growth phase. When I started with them, they were doing, actually probably shouldn't disclose, but they were smaller, and we'd basically tripled in size.
Wow.
We had more than doubled in size on our way to tripling in size in a year. But I started getting really distracted. We ended up bringing in a gentleman to be the CEO of the company. Jeff, the founder of the company, said, I'm not a CEO. I don't like all this complexity. I want to just innovate. I want to do, what I do.
Yep.
And so we found a guy who had relocated to Vegas, who had built like 3 tech companies, sold them successfully, was an advisor to a venture capital firm. And he was awesome. He was 10 years our senior. Been there, done that.
And this was right around 2002?
This was, 2002.
Yeah. Okay.
And so he also has a lot of government. He had a software company that did a lot of business with the federal government. He knew that. And there was so much that Jeff and I didn't know about selling to the government and how long of a sales cycle it is and that type of thing.
Yeah.
So, and I'm making a short story long, and I apologize, but this guy comes in to be the CEO, and he wants to bring his own team. I'm distracted with the problems at the PR firm, and they make me an offer to just leave. They'll buy my shares out. They'll give me this. It was a nice little payday.
Wow.
And I got to keep some stock in the company, which was nice. And there we go. So I end up going back to the PR firm to resuscitate it.
Okay.
Knowing that I was trying to find somebody to sell it. And so I ended up being able to sell it the second time. And it stuck. We sold it to a group out of Utah, and they were able to pay me out over time, and it worked out fairly well. And then I kept starting and innovating. And so in 2003, we started the Angel Investment Club of Las Vegas.
Okay.
And you asked me to talk about this, so
if you don't
mind, I'll just
real quick though. I want to ask you, as an entrepreneur, as we're talking, I'm thinking you had no experience in PR when you started your PR company.
Well, I had done PR within the accounting firms.
Okay. So you were doing some PR there and got some experience.
Firm.
Okay.
Yeah.
Okay. All right. Awesome.
Yeah.
And then that led you into starting your own firm. And so that's what I wanted to just dive into a little bit, is that I think it's so important, especially like right now in this market, as people start to panic a little bit because the real estate market's slowing and that type of stuff. Obviously you faced several challenges there with that business. You hit a downturn there.
Mm-hmm.
You come back and now you're rebuilding it. And, this is just coming out of 2001 also. And I think people forget there was a fairly long recession. I want to say it was a year and a half, 2 years after 9/11 that greatly impacted us.
Especially when they weren't letting planes fly, right?
Yeah,
Nobody
exactly.
could travel.
Yeah. And that definitely hurts us here, right?
Yeah.
So you start the angel investment firm. So tell us about that.
Right. So I had done well in the software company and done okay selling my PR firm. And so four guys. So I was actively involved with the Tech Trade Association. One of the things the gentleman who ran the PR firm, when I was gone, they were involved in, we had created the Technology Business Alliance of Nevada, and then he took over my role and that type of thing. But TBAN, which was the Technology Trade Association, wanted to start this angel group. And so a couple of us, 4 of us went to breakfast over at the Green Valley Ranch Casino in the old Omelet House and said, here's how I think we might do it. And I said, great. And so we started putting the plans together, and basically in 2 months, we held our first event and had like 36 people come to the Canyon Gate.
This was like
Country Club,
like Shark Tank style, right?
Exactly.
Yeah.
We all had companies that we were interested in investing in and that we wanted to show a lot of other people. So we all invited the wealthiest people on a Rolodex. Most of the wealthiest didn't come, but a lot of other people did. And, people came out of the woodwork.
And were you only targeting tech companies to raise money for, or was it any type of entrepreneur?
Primarily tech companies.
Okay.
Primarily tech companies. And so all of those 4 were really good, seemed like really good deals.
Mm-hmm.
And they all got more investment because of the event. We ended up, from the 4 people, we went to 9 people. We kind of created a structure. It's $700 a year to be a member. You got to be willing to invest $25,000 to be in the group, but you don't have to write the check to us. You just have 12 months to write it to one of the companies we show. And over time, we started having 10 or 11 meetings a year. 80 companies a year would apply for funding.
Wow.
We'd let 20 show themselves to us.
All local companies or everywhere?
Mostly local companies,
Okay.
but all of a sudden someone would get, hey, I heard of this company there, and we put some money in a company out of Arizona or one out of Colorado, that type of thing. So, but we'd hear about 20 deals a year. 80 would apply. We'd coach them up on how to do a presentation and what we're expecting. We'd let them present for 20 minutes. Ask them Q&A for 15 minutes, and then kick them out of the room for 10 minutes while we talk behind their back and say, what do you like? What don't you like?
Yeah.
How many people might be interested in investing? And then we did that. And so we ended up putting, I think, $16 million into about 24 companies.
Wow.
From 2003 until 2010.
Wow.
In 7 years.
And are any of those companies still around? Or are they...
Generally, no.
Okay.
It was pretty disappointing because 2008 and 9 happened in Vegas.
Yeah.
And
crushed a lot of people.
It crushed a lot of people.
Yeah.
Number one, we would tell our typical investor as part of the, our, I don't know if I'd call it indoctrination, but just onboarding of these new potential investors would say, look, typically if you invest in 10 deals, 8 of them are going to fail.
Yeah.
One or 2 of them will become what we call the living dead.
Yeah.
They'll be alive, but you're never going to get your money back out of them. And then one of them will pay way bigger dividends.
Yeah.
And so within the group, and then we had some people in the group that just like, some of the investors like to be the mean bad guy.
Yeah.
And push down valuations, push down this, which in some ways you needed to have happen with some, but other companies were just good and didn't want to do that.
Yeah.
I remember putting the deal together for Switch.
Oh, really?
And
wow.
Switch didn't want a low valuation, wasn't going to go through the process. And so I ended up, raising money from a bunch of local guys outside of the angel group. And, that obviously paid huge dividends to everybody that invested.
Yeah.
It wouldn't surprise me that many of those
Switch has
guys,
done okay.
Yeah. I think they just sold for $13 billion. And
Did they really?
It's going to close here.
Wow.
They went public, and then they were sold to a private equity group and taken private. So
wow.
But it was fun, to put that deal together.
Yeah.
And bring in a bunch of my friends that could invest in it, and they did, and many of them got 200 times their money.
Wow, that's
so
incredible.
That one win can often pay for 9 losers.
Yeah.
And so in the angel group, for whatever reason, we've had, maybe out of the 24 deals, 1 or 2 have paid the money back or paid a good return.
Wow.
So,
and I think that's a great thing to talk about. I think it's just proof to show that, number one, it's a reason why not to give up. Because just because you fell doesn't mean the next one wasn't work. And I think along with most entrepreneurs, without knowing in detail, but I'm sure you've had some failures in the past, right? I think that's typical of any entrepreneur, is that they're going to have failures, and there's going to be several times they're going to fail. And, let me ask you, each time something like that happened, obviously there was probably something you learned from each experience that changed what you did the next time, especially like when you went back to your PR company?
Yeah, absolutely. To me, failure is just a great way to learn. You learn more from your failures than your successes. And if you just keep going, the winners are the ones that get to write the story.
Yeah.
Right. And ultimately you win if you keep trying, because if you don't give up, you don't lose.
Yeah.
And so, and I know all kinds of the famous names that I've already talked about.
Yeah. Yeah.
They have glorious failures.
Yeah.
I remember talking with Erwin Molaski, and how he had a project in California that just was ended up not being pretty because it got killed. And, and just almost every developer I've dealt with has had a glorious failure.
Yeah.
And you just don't let it affect you.
Yeah.
But the great thing is, none of us that have had these glorious failures would trade those experiences.
Yeah. Yeah.
It helped create who we are today.
Yeah. It's interesting, when I was younger, and I've always been an entrepreneur myself and having other businesses, plenty of failures in those. And I used to, initially I always looked at them as failures. And then years down the road, I started looking at them differently. As I looked at them, I was thankful for those experiences, because I started looking back and I'm like, wow, every time when I get into another business, it was weird, because even it could be a completely different industry, and there would be something that I would use from what I had learned in the past in a different industry that I would now adapt to the current industry I was in, that would help me succeed and get a little bit further. So I think, to your point, you learn so much from your failures. And again, the reason why you shouldn't give up, right?
Right.
So,
and just one other thing related to that too, we all have strengths and we all have weaknesses.
Yep.
And too often we get down on ourselves and get depressed because I'm weak in this way or I'm weak in that way.
Yeah.
But I've come to learn in my experience is that weakness often is the opposite side of the coin of your superpower, right? Of your great strength.
I love that term, superpower.
And so by trying to change your weakness, if you focus too much on the weakness, you never develop your superpower. For me, like when I was a kid, having to move so much, going to 5 elementary schools, going to 2 middle schools, and living in 3 houses in high school.
Yeah.
That was a challenge.
Yeah.
And, half the schools I went to were rough back then.
Yeah.
Right.
Yep.
They ended up busing kids from the nicer neighborhoods into my elementary school when I was a kid, because ours was the rough neighborhood.
Yeah.
And so, but because I had those experiences, I've had to just, if people bully me or that type of thing, it's water on my feathers, right?
Yeah.
And I just move on. And I've had to learn how to network and make myself comfortable.
Yeah.
Right. And here's this kid from the Vegas ghettos that, when I had my PR firm, working with the Molaskis and the Thomas and Max and, all these great companies.
Big names. Yeah.
And it's a blast.
Yeah.
And so you just you gotta learn to focus on the positive and not give up, and just learn from your mistakes.
And I think it's great. Like, I think so many people use childhood as a reason of why they can't succeed, or because they grew up in a rough neighborhood or a poor family. I had similar background as far as financially, my family went through a lot of losses and stuff like that. And, I feel the same way as you. I look back at those things and honestly, I'm thankful now all those things happen because, somebody who's come from a lot of money, if they have a setback, it's a much bigger impact. If I have a setback now, I tell people, I'm like, even my setback now is not even close to where my lowest was.
Right. Yeah, exactly.
So it feels like nothing, you know what I mean? Also, I think it teaches you how to adapt, right? Like you learn how to adapt in those tough times. And so as you grow, the things that seem like big problems at one time, as you grow, you look back, those things are no longer that big a deal anymore, or they seem so much smaller as a challenge.
Yeah.
So, and I know one of the things you mentioned, I wanted to ask you about this, is that you said you had sold your PR firm a second time. So you went back right around 2002 and started to rebuild it, and then you sold it again in 2003.
Yeah, basically I had some of my employees had matured. And so this time we just asked one from within if he'd be willing to run it. And he said, sure. And I said, great. And so he did it for a while, and then he ended up moving on, and then a gal ended up running it, and we ended up selling it together. And she worked for this Salt Lake organization that bought the Vegas practice. And then she's, and then another recession hit in 2008, right? And so then they closed the office, but she ended up getting hired by one of our clients, and she's done great in her career. And I'm really grateful for her. But, I sold it twice, but I got paid out the second time where I didn't get paid out the first time. And I sold it out the second time for a fifth of what I sold it the first time, which is a disappointment. But it is what it is.
It is what it is.
But
right?
I made a lot of good money doing the other activities that I was doing.
Yeah.
And that's what really fueled my entrepreneurship, was you can make good money doing some other stuff.
Yeah.
And then the challenges when we started losing, I probably put more than $1 million into all these angel investments. And over time, this company failed, and this company failed, and this company, and I lost it all.
Yeah.
And it was all at the wrong time.
Yeah. Because you said most of those companies failed in 08.
Yeah. 08, 09, 10.
Yeah.
One, I just got a letter in the last 3 months saying, they ended up doing a partnership with Electronic Arts.
Okay.
Then that didn't work out. And then they did a partnership with Microsoft on the Fitbit, where they're incorporating the product on the Fitbit.
Oh, wow.
And they had 28 patents. And we're like, this is going to be a home run.
Yeah.
And then Microsoft failed at marketing the Fitbit, and the Apple Watch and other things. Or no. Yeah. It wasn't, the Microsoft Watch wasn't Fitbit. It was something else.
Okay.
And Microsoft failed at launching their watch. And so we kept doing these great partnerships with people that ended up not doing what they wanted to do.
Yeah.
And so we just got a letter saying, hey, we're going to cease operations and we're going to give you back 1/10 of your money or whatever. I can't remember the exact number, but I know it was like, here's another one where I'm getting 10 cents on the dollar. And so that's why now that I'm in real estate, I'm like, why didn't I do this 20 years ago?
Yeah. So let's talk about that. Let's talk about, so now your development company, Camino Verde Group. How long ago did you start that?
We started it, we call our official date February 20th of 2019. But I've got to tell you a little story before then.
Sure. Yeah.
A management company that I worked with a lot was first RMI, or Realty Management Inc.
Okay.
And then Realty Management Inc. Ended up selling. And then the successor organization, a lot of the people started Westcorp Management.
Okay.
And I knew all those guys from 30 years ago when I did work for them in the PR firm, and even some of them before then. And so they gave me an opportunity to do some work with them. And as I looked at their organization as a consultant and a business guy, I said, you got this accounting group that has some pretty unique skills from what I can tell nationally. And I think we had to spin it off into its own entity and create an outsourced accounting group for apartment owners all over the country.
Interesting.
And they said, write it up as a business plan. So I wrote a 2-page business plan up, submitted it to them, and they said, I think we agree with you. So we're going to spin this out. We're going to give you some equity in the deal. Go make it happen.
Wow.
That was kind of a fun deal. So we created Ascent Multifamily Accounting.
And was this between 2008 and 2019?
Yes, this is 2013 and 14.
Okay.
So in 2013 and 14, I get involved with this and we start building this accounting group up, and we end up in the Inc. 500.
Wow.
We were the 371st fastest growing company in America, growing by 12,000% over a 3-year period. And, we're here off of Sunset and Eastern. And, and what we do is we do bookkeeping for owners of apartments all over the country.
Wow.
For companies as big as Lennar, when they started LMC Living,
okay,
they hired us to set up their company. And we basically we paid the bills, we opened the bank accounts, they used our chart of accounts, and they had us set it all up because they say, we know home building. We don't want all our home building guys to try to set up something that isn't catered to multifamily. You do it, and then we'll have them take over a well-running ship. And so for 18 months, we ran the back office for LMC Living, which is Lennar's multifamily group.
Oh, wow.
Right. So that was our biggest client. But we work, we do work now in probably 30 states.
And so I'm assuming there was a need. There was something that you identified that was a
So
need in the market
there's
for that.
owners that like to be self-managers.
Okay.
And typically we don't recommend, for more than 50% of the owners of apartments, they should manage their own properties.
What are they? Let me ask you, because I think, being from Vegas, we all think that every apartment complex is 500 units. But in a lot of other markets, they can be 10, 20, 30.
Our smallest property I think we've ever done is like 6 or 8 units. And our largest was, I think 1,560.
Wow. Okay.
Right. And our median is about 228 units.
Okay.
And, so we've got clients in Santa Monica or Miami where they have lots of 12 and 20 unit and 40 unit apartments that are charging, $2,500 a month.
Yeah.
For a little, and then we've got other clients in other markets that have, 600, 900, 1,500 unit properties.
Wow.
So I started doing this, working with owners, and today we have like 53,000 units.
Wow.
We have 45 owners. So the average is about 1,100, 1,200 units per owner.
Okay.
And they'll have 5 or 6 properties.
Okay.
And we do their books.
Wow.
We pay the bills every week. We act as the back office of the management company because they wanted to be self-managers.
Okay.
But we also have our largest clients are management companies that just want a lean operation and they don't want to have a back office of their management company. And so our largest company is in Texas. They've got 12,000 units and we're their back office. We started them when they had 3 properties and have helped them grow to 70 properties.
So it's so interesting. Real quick, I want to touch on something because you had a business degree. That's what you graduated with. Emphasis in marketing, right? No background in accounting. And now
I had to take plenty of accounting classes, and I got into college with.
But you're not a CPA.
No, but I was a numbers guy. For when I took the college entrance exam, the ACT, I didn't miss a question in math. I was always a math nerd.
Yeah.
From 4th grade on, I was a math nerd.
Yeah.
But I was a math nerd with social skills. And so I could do PR for accountants, right? And so
that makes sense.
So I was always a math nerd. So when Laventhal and Horwath hired 9 business developers around the country at the accounting firm, 7 of them didn't make it to a year.
Yeah.
1 of them didn't make it to 18 months, and I lasted 3.5 years before I left to McGladrey.
What I love about this is that you're not a CPA, and I think most people would think, oh, if I was going to start an accounting firm, I would have to be a CPA to start an accounting firm. And you have a very large accounting firm, and you're not a CPA.
But my 2 partners are CPAs.
Of course,
2 of the partners are CPAs.
But you saw an opportunity, and you put it together, and you went after that opportunity.
And I've made them uncomfortable the whole time because why are we marketing this service like this? We're accountants. We need to spend less money, and I said, no, we're going to invest in these workshops, and we're going to invest in some social media here. We're doing, we've done our own podcasts and that type of thing. And and it's worked.
Yeah.
Right. And, people say they Google multifamily accounting. We're like half of the responses. And so, we get a call every week all over the country saying, hey, will you look at our portfolio? And half the time we tell them, you shouldn't probably manage your own properties, right?
Wow. Yeah.
You just, again, I don't think it's for more than 50%. I think it's more like 15 or 20% of the guys that own real estate should manage their own properties.
Yeah.
But those people that have that inclination, we help them do it better. And then we help management companies that are doing the other part.
That's great. And one of the things I love about your story so far, Mike, is that I love how you really learned about the industries that you were servicing by working in them.
Mhm.
And I bring that up because one of the biggest questions I always get from real estate agents is how do I get into luxury, right? And your story made me think about the answer to that, which is what I've given to a lot of them, is put yourself in that market. Whether it's and this may sound crazy to some, but the advice that I've given to some agents is I said, go work at a high-end restaurant, go work at a high-end car dealership, whether it's in the service department or whatever, and learn how that clientele thinks and what they're going to expect and how they operate. And you'll get to experience that on the back end so that now when you go and you begin to sell luxury real estate, you're not going to be intimidated anymore because you're going to feel comfortable in speaking with them because you've been in that position where you've been able to speak with them and you understand the language that they want to talk. And that's exactly what you did this entire time, is that every industry that you were in, you learned about the insides of that industry, and then you saw an opportunity.
Exactly.
And you went out and you're like, hey, I know inside accounting and real estate. And so now I'm going to start a PR firm that I can help them market because I know what their strengths and their weaknesses are. That is such a really cool, some in-depth thought of what it takes to be an entrepreneur. And I think it's, you hear about great leaders. Great leaders can handle any position in their company, right? Because they've done all of them.
Yeah.
So
I totally agree. It's been an interesting ride, but it seems like I was almost prepared for every next opportunity.
Yeah.
I brought something new, some experiences to add to my partners. Oftentimes I've partnered with other people that have a certain skill set and I'm complementing it. And I bring to the table something from the time that we started, the accounting firm, when I was with the accountants, to SRD, to Switch, to different things. I brought something they couldn't get. They had a good idea and they needed certain experience. So, and for me, I kept learning. So from the accounting firm, we started Ascent Multifamily Accounting. As I started taking clients out to dinner, I'd say, how'd you get in the business? Right? Oh, I've got 7 properties. I've got, 1,500 units or 2,000 units. And this is what we're doing. And after about 4 years, I'm like, I can do that.
I love it.
That's a good living. And they get recurring revenue.
I want to point something out. You said, I can do that.
I can do that.
It's the I can attitude, right?
Yeah.
I mean, I think that's one of the biggest things that makes the difference in an entrepreneur is that you see opportunities and there's no limit in your mind that, you see yourself as the same as the person who's sitting across the table from you, right?
Right. I see lots of different people
that
have succeeded that are no different than other guys that aren't succeeding. The only difference was they had moxie, faith, and they kept going in spite of failure.
Yeah.
And so that's my thing. If, too often people have faith, but they don't put in the works behind it. Like what you were saying, go get a job, luxury, learn the business. And I was fortunate to be able to get paid while I was learning the business on the Ascent Multifamily Accounting.
Yeah.
That I learned how the back of the house of owning a apartment property works, the cash flows, the benefit of the depreciation, and all this stuff. And I'm like, I can do this. So then one of my buddies that I had done some consulting work for in the past says, hey, I'm about to sell my company. And what do I do next? And I had this business plan in my mind to start buying apartment complexes. And I said, Kevin, why don't you go in with me and let's do apartments? He said, funny you should say that. My brother sent me this little book and it says I should consider this seminar on owning apartments.
Okay. He's
made some good money investing in real estate. And so we looked up, found out where the next seminar was. We paid to hear they did a free little workshop at one of the hotels here. We went to it. And then they pitched us all those things, right? They pitch you to buy the next thing.
Yeah.
And buy the $1,500 weekend. And so we decided to do that. And thought we knew it all and realized we didn't learn half of what we needed to know.
What you need to know, right?
But, we gave it a shot.
Yeah.
And we bought our first property in 90 days.
I want to point something out there. So you said that you thought you knew everything, or you thought you knew everything you were going to need to know. And I think that's another thing to point out about entrepreneurship or business or anything, is that, sometimes people hesitate to go into something because they want to wait until they know it all. And I think the reality is that you can never be prepared for what you're going to learn in business, no matter how much schooling you take, no matter how much coaching you get, until you start to actually do it is when you start to learn a lot about what you're doing.
Yeah.
Yeah.
Yeah. So ignorance is bliss for entrepreneurs.
Yes.
Start it,
Start it and figure it out later.
Yeah. I remember when I first started the PR firm and I quit the accounting firm.
Yeah.
Basically, I was going to be partners with 3 other guys in a company called Carrera, Nevada.
Okay.
And I had decided at the end, the way they wanted to split up the compensation system, I had just bought a house. I needed a certain amount, and they didn't promise me much. And so I said, you know what? If you're not promising much, I'm just going to do it on my own.
Yeah.
And we were friendly buddies. And so the guy says, you said you were going to start it on your own. You haven't started it.
Yeah.
Have you written your resignation letter? I said, yeah.
Yeah.
Then print it out and go walk into the managing partner's office and have a discussion with him. And you got to do it now.
Yeah.
And so I said, okay, Mark, I'll do that. And so I did that and I quit, and I didn't really know what I was getting myself into, but I thought I could get a couple law firm clients that kept bugging me for advice and stuff. And the accounting firm basically said, yes, they're willing to be my client. Then I got these 2 law firms, and actually I hit the ground running.
Yeah.
And did my own thing, and it worked out. But I didn't know I was shocked at how much I didn't know that I didn't know.
Yeah.
And that's what happened with apartments. We bought our first apartment, a little 36-unit project on Sahara and Sherwood.
Okay.
In a 60-year-old property. And we bought it. We got a great loan. And I remember when we first, Kevin and I, we took our contact lists, and mine was pretty big and his was okay. And we threw out everybody that we didn't think was an accredited investor and ended up with 1,100 names. We did an email saying, you want to invest in this project with us? We're syndicating it. And we got like 20% response. And it was like, take me off your list.
Yeah.
I don't, what do you know about investing in real estate, And I'm like, oh my goodness. And so with 3 weeks before we're supposed to close and our money's non-refundable, we had raised 150 of the 700 grand we were trying to raise.
Wow.
And we're like, what are we going to do? And then this 21-year-old kid that I had met at a couple conferences got our email, and he calls me up and he said, hey, Mike, how you doing on your fundraise? Cool project. It seems rather interesting to me. I said, well, we're only 150 into a 700 raise. And he says, and he's from Silicon Valley, and he was living in New York, and he had dropped out of college because he knew he wanted to be in real estate. And he said, if I can raise you the last 550, will you give me a third of the sweat equity? And my partner and I didn't take us very long to say yes.
Yeah.
It's like, sure.
Yeah.
And he raised $550,000 in 4 days.
Wow.
And he had kind of built his own network up. And so we gave him a third of the sweat equity.
And you guys could have very easily, when you got the 150,000, we're at the point you could have very easily quit at that point.
Yeah.
Said, hey, this is going to be a failure. Absolutely. It's not going to happen.
And we've had that happen to us a couple times.
Yeah.
We bought a property right behind it.
Yeah.
Just as COVID was hitting. So we put it in escrow. The world was great. Rents are going up. And then COVID hits. There's a shootout on the property. And it's a week before we're supposed to close. And my partner says, I think we had to back out on this.
Yeah.
The hotels, we're hearing the hotels may close, this, that, or the other thing. I said, no, we've got all the money in the bank to close. We've got the loan lined up. It's going to work out. Things will pass. There's a lot of other people in this boat. And we built up a little reserve. When we fundraise, we ask for working capital as part of the raise. And we've got some capital to go through this. And so we did it, and it's turned out to be a great deal. And
that takes guts, man, because most people would have bailed. That was such a great opportunity for somebody to bail, and most people would. And the fact that you guys persevered and pushed through it.
And who would have known that rents would then go up?
Yeah.
Like
never.
18%. And it was like, And it turned out to be a great decision. And so, we have challenges. We blow through them. You don't stress out. You don't freak out. You just write it on a piece of paper. Pros and cons.
And I want to go back to this guy that you talked about from Silicon Valley. Goes back to your superpower that you talked about learning in 4th grade, which is networking, right?
Right.
So you networked at an event, you met this guy, and then he ends up becoming the person who swoops in and saves the day with you guys being able to, buy your first apartment complex.
So here's the guy now, 24 years old. He saw our documents. I don't think he had bought a property yet. He's now over 2,000 units.
Wow.
He's buying primarily in Houston, Texas. He's doing a great job. He's written a book. He has his own podcast. He is so polished. He said, I don't need school to do what I need to do. And he focused and he dresses the part, acts the part, and became the part. And now he owns, probably 200 million in real estate.
Wow. And he's 24 years old?
24 years old.
Amazing.
Yeah, and Rob Beardsley, shout out to Rob. He's an awesome dude. Buy his book on underwriting. It's a great book.
Definitely. And I'm sure your accounting firm now services apartments, right?
Oh, yeah.
Of course.
Yeah. So we've since gone on. We've decided to get into developing. I was actually helped a guy fundraise some money for the Water Street project.
Okay.
We're about to open in February. We've built 152 units with 2 stories of a restaurant and some office on Water Street, right across from City Hall in the Lifeguard Arena.
Yeah, I know that's that.
And it's opening in February.
Very cool.
Luxury apartments, a pool on the roof, amazing views of the Strip. So if you're looking for a good place to rent, that's it. So I was a partner in that before we started Camino Verde. And now we've started doing other developments, and we've got over 1,400 units in development.
And the focus of Camino Verde is, from what I understand, low income housing. Is that correct?
No. We have 3 focuses.
Okay.
And in those, so one of which is build new development. One is buy old and rehabilitate, and the third is land development. So in that regard, we've purchased like over 200 acres in Ephraim, Utah, which is the home of Snow College. And they just announced a new LDS temple there. It's about an hour south of Provo.
Okay.
And growth, as we know, kind of in Utah, it goes north and south because they've got mountains and water, the lakes or whatever. So we're also doing land development in Charleston, South Carolina.
Okay.
And so we've got there. So we're subdividing parcels on both of these projects and then selling off the projects entitled. So we've got a Spring Hill Suites. We've got a medical office building going on the land in South Carolina, and retail and restaurant. We've got
so you're doing commercial land development, residential land development.
So we've built a good team. I had a lot of relationships that we pull in and say, guys, we got something going. We've got access to capital. You want to be involved? And so we've had some good guys jump in, and so we've got a top executive from Marnell that has come in, and my partner Kevin, and we've got a guy who was running a $2 billion hedge fund, and he was the CFO of a $2 billion hedge fund in Texas. That's our CFO now, and we've grown, and we're doing a 304 unit affordable project in Henderson on Volunteer in Bermuda.
Okay,
we just received $15.7 million from the state.
Wow.
To build that one. We're working on another one in North Las Vegas. It's 269 units. We're working on a luxury senior project on Russell Road near the Central Christian Church.
Okay.
And the Costco there, not too far from there.
Yep.
That's 279 units. So all totaled, we've got more than 1,400 units we're developing right now.
Wow. That's impressive, man. That's impressive. So let me ask you, obviously you guys are still forging forward in this market. One of the things I always like to talk about on the show is opportunities, right? Because I think you and I talked about this a little bit earlier, and every entrepreneur and every successful person I know has always told me that in every down market, there's opportunities.
Oh, absolutely.
What do you see, Mike, in coming up in the next year, maybe to even 2 years with where we're at now, but going forward, where do you see those opportunities for someone out there who's watching today?
Okay. So a couple things. We think there's a few more interest rate hikes
Mhm.
before it comes down. We think there's going to be some issues. There's plenty of people like us that have bought properties and we put bridge debt or temporary debt on it
Mhm.
to do the renovations. And then they forecasted a 4.5% or 5% refinance permanent loan
Mhm.
on the out. And now it's not going to be that. It's going to be 5.5%, 6%, 6.5% permanent loan.
Okay.
Now deals were being done, 7, 8, 10 years ago. It's, 5 to 7% interest. And so they can work. It's just waiting for the market to catch up. And so some people get stuck.
Yeah.
Where they have to unload a property faster or cheaper than they expected.
Yeah.
Because of those bridge loans. So having dry capital now, because in June or September, I think there could be some good opportunities. Mostly because, and the banks are actually going to have a problem. We've talked to a number of bankers. They've raised interest rates too high, right? So they
Mhm.
have people trying to renew loans. And the difference between those loans is for all kinds of regular businesses,
Yeah.
operating businesses, right? When they're renegotiating their next line of credit, all of a sudden what was, 3 or 4% is probably now,
Interesting.
6 or 7%.
Yeah.
And so banks are maybe inheriting some assets that they don't want to inherit.
Got it. Okay.
Because people can't continue to keep the asset the way it was. And so there'll be some opportunities from banks. And if you're an investor, I mean, there's some good opportunities to invest,
Mhm.
multiple different ways. And so that's what we're just trying to, stabilize whatever assets that could be at risk. Like we've got one deal that we closed today and it records today, that we sold, just to give ourselves some dry powder.
Mhm.
It was one of those that had a bridge debt on it. And we were fortunate enough to have a guy put money down on it 90 days ago, probably more than 90 days ago because he got an extension. And he was in a 1031 and he had to close or else he's going to pay a lot of tax. But he beat us up and got some concessions but he's paying a little more than he wants. We're accepting a little less than we want, but it's going to work out and we're going to have some dry capital.
And as I say, that's one thing I have seen for opportunities this year is that a lot of people that have money that sold properties at the beginning of the year are now needing to quickly move that before the end of the year. And so there's some urgency there for them to purchase properties. And so again, that's where they can capitalize, right? But that's
Mhm.
where anybody who's out there, a broker or somebody can say, okay, this is where there's an opportunity in the market right now is identifying who these clients are. And then, to help pair them up with those opportunities.
Yeah.
So,
Yeah. So like a group like ours, we start 2 or 3 developments a year
mhm.
and we buy 4 to 6 developments a year. So there's always opportunities with us.
Yeah.
And it's been kind of fun to watch as we've gotten investors, they put a little bit in to start with and then
Yeah.
they start getting checks or whatever. And then they
get really
put a little
happy.
more in. Yeah. And,
Yeah.
and so, or on the development deals, I think most of our stuff will be coming out of the ground in the next, some are already out of the ground, but some are coming out of the ground in the next 6 months. And by the time they open in 2 years, they'll be awesome.
Let me ask you something I think is really important. And just some of the names you touched on in the past that you've worked with. Who were your mentors? Were there people that you worked with? Were there people that you coached with? There's always, I think that's the one thing that a lot of people watching, entrepreneurs, people that are just starting out. I think the one thing they don't realize sometimes is that entrepreneurs and highly successful people are some of the most giving, meaning that they are so happy to sit down with somebody and give them information if that person's going to take it. Because a lot of us have all been there at one point.
Yeah.
So,
yeah. So there are so many different folks that are helpful. Like I can, we were buying a bigger property around Nashville, 258 unit property, and we had never bought anything a third of that size before.
Yeah.
So a guy who I had met at a conference, who we shared several common friends, he said he had 3,000 units. At the time, we probably had 300. And he said, I'll help you out. Show me the deals and I'll tell you what I think about them. And I showed him this one particular deal, or my partner showed him this one particular deal. And he said, I like it. We can guarantee the debt for you. We'll raise 75% of the money for it. And we'll provide the liquidity that the lender's going to want to see in your bank account. And I said, what do you want for that? And he says, I'd like half the deal, if that's okay. Half the sweat equity. And we said, okay. And so we bought a property that doubled our portfolio size.
Wow.
2 years ago.
Yeah.
And it was a screaming deal.
Yeah.
It was one of my accounting clients.
Okay.
See, this is where my network came in.
Yeah.
I went to one of my accounting clients that's a property manager. And I said, hey, Billy Joe, do you want to manage another property?
Yeah.
Bigger than anything in your portfolio today.
Yeah.
And she said, oh, yeah. And I said, great, go find it for me. And so she found an off-market deal from a contractor who really wasn't ready to put it on contract. He had horrible records, doing everything by paper, nothing in any software package.
Yeah.
We couldn't get a trailing 12 from him. And he's basically agreed to sell it to us for $15.5 million. He had bought it for $9 million and spent, probably $4 million improving it. So he's into it 13 and we're buying it for 15.5. And he's like, woohoo.
Wow.
But we're doing the numbers on, we think this could be worth a lot more. And the way he improved it would probably do a couple things different, which we did. And 18 months or 15 months later, we got an appraisal on it to refinance it. And it appraised for 26.
Wow.
So we bought it for 15.5. It appraises for 26. We got it refinanced, gave our investors 75% of their money back, and they still own the property with us, and they're still getting cash flow.
Wow.
And it's awesome. That's a good deal. But it was because I had a partner, somebody who helped me finding the property, somebody helped me financing and getting the equity for the property. And we had investors that were willing to come in with us on the deal.
Your network.
Yeah.
Awesome. Well, Mike, thank you. As we wrap up here, I want to, as an entrepreneur, if there's one thing that you could, as a tip to any entrepreneur out there or somebody who's in that position right now where, maybe they started their business a year ago or 2 years ago, and now they're seeing, the fear of recession and these other things that are coming, what would be the one tip that you would give them?
I'm going to say I teach Sunday school, so I know all these quotes. Faith without works is dead, right? You got to have faith. You got to put in the work, right? And be resilient and be positive. Have, on the faith side, be positive, know that it'll work out, but put in the work, do the homework, use your network, dial for dollars, right? And do what it takes, whatever it is you're supposed to do, put in the work.
Yeah.
Too many people, aren't willing to put in the work, and it takes work to succeed.
Yep. I agree. Awesome, Mike. Really interesting story. Loved hearing. I'm an entrepreneur myself. So hearing your story, honestly got me pumped up today. I'm like, I've got all these creative thoughts going. I'm like, oh man, I need to go do this and do that. So man, I really appreciate you coming in today. Enjoyed the time.
Thank
you for being a part of our show.
Glad to be part of it. Thank you.
All right, Mike. Thanks, man.
Okay.